It's very important in trading to trade with the direction of the trend. One of the filters that we use to determine the trend is the hourly chart's 20-period simple moving average. Now if you're watching 10, 12, 15, or 20 currencies, you don't want to be watching them on a 2-minute chart or a 5-minute chart and an hourly chart. That's twice the number of charts. So we've built in longer time frame tools that you can use on shorter time frames so that you can have the benefits of the short and fast time frames precision while still seeing what the longer time frame charts and trends are doing. This tool is called the Containment band. You right click on the chart, chart settings, go to add studies, and go down to Containment band. I like to black out the average color, and this is a dual purpose tool that shows you both the hourly chart's 20-period simple moving average. Above that level you want to focus on buys and looking for buys, and below that level you want to focus on sells. Now this is a dual purpose tool. It not only shows you the longer time frame charts moving average, but it also looks back over the 20 past trading days and finds the most extreme levels of volatility and plots those volatilities away from the hourly moving average. So these levels the market usually reverses at. Sometimes, like in this instance, it comes back down within 5 or 10 minutes. In other instances like this, it takes a couple hours before the drop eventually happens. I also like to add the 2.0 bands on here, and I make them white. Usually at these extreme white bands, the market has a much higher probability of reversing. Let's look at how this tool worked on the following day. You can see it came up, hit the upper containment band, and then dropped. Let's look at some other currencies. Pound dollar. When the market is hovering around the hourly and finally breaks up to the upside, it tends to continue. Every once in a while you get a drop through the hourly and it comes back above it. That's usually a pretty good place to get in. Look at this, hourly moving average in the pound yen acts as support. There's some buying there, some buying here, some buying here. And once it finally drops, because there's no more buyers enough to push it up and make a higher high, it then falls off a cliff. You scroll back in time, you can see frequently when the market breaks from below to above the hourly, you tend to get trends. From above the hourly to below, decent size move. Market broke out to the upside and kind of consolidated, and once it broke out over this little consolidation area, you got a big trend. Let's look at some other currency charts, for example. Here's the Australian dollar. Some selling here, it comes down. And this is an instance where the statistical trend was so strong that it kept inching its way up. And notice it didn't really explode outside of our outer band. So this makes an excellent place to start looking for profit targets if you had bought earlier. And to reduce your risk in trading, it's usually wise not to buy above the upper band because the likelihood of it continuing is less. The key to trading is to have small losses and bigger wins. And so if you buy above the upper band or so below the lower one, it's not likely to move too much more, and therefore you don't have a good win versus loss ratio. Again, you can see this one broke outside the bands, didn't really go over the outer extreme band. This is usually the maximum move you're going to get if you had bought this little pullback here. Most of the time if you see it stall around this level, you want to get out of the trade because otherwise you're going to be giving back pips. Notice the dollar CAD came down to the lower band, reversed, came down to the lower band and went sideways. Again, this is an excellent place to get out of your trades or consider tightening your stops radically. Notice when a currency breaks out from underneath to above it, tends to continue up. This one wasn't that much. Came back down again, there was some buying, and when it came back up it didn't break that high. As it rested here and broke down underneath these two levels low, it then began a new downtrend. Notice this CAD yen came up to it from below. There's some selling here. Once it broke out above there, it's usually in your best interest to look for pullbacks or sideways consolidation breakouts and then trade it on the long side by buying. And when it gets up to the upper containment bands, usually or oftentimes the market stalls or reverses. Now we do use this tool in conjunction with many of our other statistical currency trend tools. And so when you see this in our classes and in other videos on our website and on YouTube, you will see a much more complete picture of how to use this. If the market has incredible strength, then it could pierce through the first band and go to the second one. If it hits the first band with less than 80 or extreme strength, then it's very likely or more likely to stall and reverse. And you'll learn this in other of our videos.